what goes on in bond markets, I think, is probably one of the biggest things that would keep me awake right now.
The biggest cumulonimbus clouds, isn't it? I agree with
you. So global debt issuance now is what, $335 trillion, something like that. 35 trillion of that is US denominated. Trump's going to be adding 2 to 3 trillion with his big, beautiful bill. Other countries, I mean, the UK, we're probably, we've got a debt to GDP, debt to GDP ratio now of 96%. I mean, it would have been over 100 had Rachel Reeves not tweaked the definition of what constitutes the national debt. We're probably in the UK at the sort of pushing up against the limits, I think, of what we can probably borrow without markets being nervous. And you saw in the wobble that we had in US Treasuries fairly recently that people are even prepared to test the Treasury market with that. And I think that's quite nervous. As I say, I think the ECB was quite smart on this in terms of how they've handled their QT program. I think it's certainly something that must be agitating the Bank of England right now. Do you carry on selling down the bank's bond holdings in the way that they have been? Why wouldn't you? I don't understand why you wouldn't hold them to duration. Personally, I'm fascinated at the fact that there has been this sort of shift, this move away from long-dated assets, long-duration treasuries to shorter-dated assets. I think the UK's in quite a decent position here because, the maturity of our
office has always had a very good reputation, though, Ian, hasn't it?
Oh, yeah, they were absolute heroes. And they certainly were during that whole period of QE when the bank was expanding its balance sheet. I think the average UK maturity is about 13, 14 years, which is further out than some of our peers.
And you can listen to the full version of that podcast wherever you get your podcasts from.